you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral. We're 10 weeks before the end of the year and the S&P's at 6,800. I think it's still a base case then for people to say that in just a typical year, the S&P should gain another 4%. That would put us over 7,000 into the end of the year. And I think that that's sort of the minimum. But because we've got the Fed cutting, and they started in September, they've been on pause all year. That only happened twice in the last 50 years, which is 1998 and 2024. I actually think the S&P, given the skepticism that's been plaguing this market all year, we could do far better than 4%, maybe even 10% into year end.
Wow. Okay, so where does crypto fit in, especially when you're looking at how those currencies are moving versus what's happening with tariff concerns, global trade concerns, et cetera?
Crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with U.S. and China on tariffs and trade. And that was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later that are plaguing the crypto market. But I think we're almost through that, because a measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive. So I think you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral.
Even CoinGlass reporting that none of the top 30 bull market peak indicators have flashed at this point yet. According to the analysts, according to the data, the bull market hasn't even fully kicked off yet. We've been chopping sideways, and it is going to be a huge week moving forward as we near 30 days of the government shutdown. Fed Chair Powell is going to be coming out and speaking. We're looking for an interest rate cut. We're talking about $15.2 trillion market cap worth of big tech stocks earnings that are going to be reported. Microsoft, Google, Meta, Apple, Amazon. Trump and Xi meeting, possibly even coming to an agreement soon. Brad Garlinghouse announcing the formation of Ripple Prime, and so much more I will cover in this video for you today. But first, welcome back to the channel. I am JR, your favorite crypto dad, and you know what to do. Give me that comment 777 down below if you're feeling bullish, if you're feeling blessed, and you're ready to live your best life. Smash that like button. Hit subscribe to affirm it, and let's run into the video. In a major announcement, Brad Garlinghouse introduces Ripple Prime, saying they're pleased to share that their acquisition of Hidden Road is officially complete, making Ripple the first crypto company to own and operate a global multi-asset prime broker, bringing the promise of digital assets to institutional customers at scale. He goes in to say, I am reminding all that XRP sits at the center of everything Ripple does. Lock in. And possibly an even bigger announcement taking place today, rattling the entire crypto sphere, happening right now, and almost nobody is talking about this. Zelle, the app that basically runs every banking system in America, the same Zelle used by over 100 million people, is about to start processing international transfers using stablecoins. This is not a small update. This is not a fintech innovation. This is the US banking system quietly moving onto the blockchain rails without even announcing it. And here's the part that should set off the alarm bells. This is the rollout of the digital dollar without calling it a CBDC. The government didn't launch a central bank digital currency directly, because they knew the backlash would be explosive. So instead, they're pushing the same system through private banks that already have the public's trust. No new app, no new wallet, no new learning curve. Just, hey, Zelle works globally now. Isn't that convenient? All under the hood, every transaction is traceable. Every transfer is programmable. The dollar becomes software. And they get to say it's not a CBDC because they didn't issue it. It's just modernization. This, folks, is the Trojan horse, but it doesn't slow Bitcoin down. In my opinion, it's going to push people to Bitcoin faster. And who knows? I haven't heard anything about ISO 222 talked about with these banks. So maybe, just maybe, Ripple is going to be at the center of all of this. One fact remains, we are looking at very bullish times ahead. And according to people like Adam Livingston, that liquidity will flow and the bullish times still lie ahead. Bank reserves just punched a hole in the $3 trillion floor. Liquidity is bleeding faster than a GameStop short squeeze, according to him. Quantitative tightening is cornered, the repo desks are sweating bullets, and the Fed's only parachute is the money printers turned on and set to infinite. Bitcoin is the anti-fragile battery waiting to soak up every dollar of panic flow. And in 2019, the repo crisis led Bitcoin to a gain of 350%. In 2020, quantitative easing Zelle led Bitcoin to an increase of 1,500%. In 2023, the banking wobble, Bitcoin went up 170%. Now reserves are within 5 weeks of the danger zone. ETFs are hoovering supply, and the scarcity effect is loading in the chamber. Guys, this is a huge catalyst for that liquidity that we're looking to flow into Bitcoin and the crypto markets. And there is now a 98% probability of another 25% basis point rate cut at Wednesday's FOMC meeting. There is even some calling for a full percentage point cut. I don't think we'll see 1%, but it does look like we are moving into Moon-vember. So if the Wall Street cheat sheet psychology of a market cycle plays out on the current market cycle the way it is, we are still in hope. We are chopping in October and turning it into more of a Choptober. And then there'll be Moon-vember, and December would be in belief. Thrill and euphoria would be creating a new all-time high sometime between January and February. Let's not even talk about Q1, Q2 of 2026 yet, as we enter complacency, anxiety, denial, panic, all the way through April, May, and June, and hit that bottom sometime in June or July. It's a very likely scenario. It marches out with the elongated banana curve that we see people like Raoul Powell talk about, and quite honestly, it looks like the charts are quite moving in that direction. Let's move into the charts in a few moments here. First, let's get into some more breaking news and market updates coming out of Altcoin Pro University. Again, the link is down below for that. We'll talk more about that in a moment though. But just coming up on crypto news, Jupiter launching its first prediction market. Talked about the CPI earlier this week, and market updates. This is a big one. DeFi market update, October 26th, showing our outflows for Bitcoin at 6,000 and our inflows for Ethereum at 84,000. In case you haven't been paying attention to your meme coin bag wallet, there have been a little bit of a pump over the weekend with the meme coins that are on ETH. Why this matters though? Slight Bitcoin outflows paired with ETH inflows reflect a more cautious tone from investors. Market participants are balancing risk, but they're not fleeing entirely. On-chain activity, DeFi TVL, $152.5 billion. Stablecoin net inflows at $1.2 billion. And USDT dominance sits at 59.33%, which is absolutely huge. You can read more at Altcoin Pro University. Click the link below. You got 14 days to get your money back, and I'm sure in those 14 days you'd probably be able to blaze through the majority of these classes, which are worth their weight in Bitcoin or gold if you prefer that. Let's look at the markets, get a market view overview here. A quick refresh at Coin Market Cap shows that we are at $3.84 trillion total market cap for cryptocurrency at the time of this recording. Happy Sunday. I hope you all had a good weekend, and we are looking for a fantastic week ahead. The Fear and Greed Index is actually moving up. It is at a 36. It's nearing neutral territory, as well as the Altcoin Season Index sitting at a 26. Altcoin Season, the altcoin total market cap sector is sitting at $1.57 trillion. I stand corrected on that, ticking up just a little bit. And as we move into the charts and we take a quick look over here at Bitcoin, sitting at $113,600 at the time of this recording. Why is that important? We are above 112,500. This is a zone. Again, these are my technicals, not your technicals. So hopefully they just give you a little bit more of a rounded perspective when you're doing your own research, because this is not financial advice. Simply informational and educational purposes only. So do your own research, do your own due diligence. Don't buy Bitcoin because I'm talking about it. But I've been talking about Bitcoin needing to get above 112.5 for a while. This is that red bar for those of you who are watching this video right here. Ultimately, we need to recapture $115,000 and turn that into support for Bitcoin before we can start making big moves to the upside. However, the RSI has created a bullish divergence by crossing over its own moving average, and that is an exciting metric to see. Moving into Ethereum, back above 4,000 at the time of this recording, needs to get back above 4,200, 41.90 to make me a little happier, but this looks like it's bounced off of a double bottom, a W pattern formation there that has played out very nicely, and it is continuing to move to the upside, as well as Solana. Solana getting back up close to that $200 mark. This is one I'm keeping a little bit closer eye on, as it has been marching through a narrowing wedge or a bull flag, and it looks to be breaking possibly out to the upside. Should it do that, measuring stick would put us somewhere in that 250 to 260 range if it extends all the way there without meeting much resistance. Obviously, market conditions need to be present, and retail is virtually non-existent in crypto as we speak. It's been nothing but crypto degens like myself and yourself that have all been left over for the last 1 to 12 years, I'd say. But nonetheless, moving forward, not seeing a whole lot when it comes to DeFi projects. Aster and Plasma struggling to gain. Sandbox and OG memes look to be recovering a little bit, forming a double bottom. I can zoom in on that one a little bit more for you guys. And that is a beautiful pattern. If we can play off of it and continue to move to the upside again, we need some volume. SHIB and Doge, the same thing, looking to move to the upside a little bit more. But again, these are just OG bags that we're looking at here. There's not a lot of new retail coming into this. Even when we look at things like Giga, which would be more of a modern, more of a recent meme play, so to speak, it's playing out the same pattern. It is starting to kind of retrace and move back up to the upside a little bit. RSI's gaining some strength on it, but again, it just doesn't have any of that retail je ne sais quoi like we need it to. So nonetheless, moving into XRP and XLM, XRP is in a good place for me. I'm happy that we are back above this $2.61 mark currently at the time of this recording. It's been struggling to hold that as support. It has not failed it though. And then for me, guys, I'll zoom out and show you guys this one here. There's a yellow line right here below this green zone. This green zone represents an area of currently resistance from 261 to 274. We need to get above there and flip that into support. But 261 has been kind of my hard line in the sand. It's not an entry or exit point for me. I'm just talking about it as a technical standpoint. 261, and we see this W playing right up to it, has been, for me, a hard line in the sand that if we can get back above that, I have a lot more bullish confidence that we will continue to move to the upside. We don't buy the news and sell the rumors, but news can exacerbate and rumors can exacerbate a current market trend. And if XRP is moving to the upside and some good news comes out about it, it causes retail, obviously, to get into it. Institutions, I think, are already played out at this point and accumulating as much as they could. We, don't have to zoom back too far to see the accumulation phase on XRP. But if that's the case and retail can jump into it, we could probably bump this thing up to the next level. Once we can get back up above 275, I'm confident at that point. I think I mentioned this in a previous video, and again, it's not financial advice by any means, but I'm not really sure how high XRP is going to run in a bull market. So for me, I've got to look at profit-taking targets, and right above 274, 275 starts to enter target one for taking a small amount of profits, and then again, probably a little bit more retracing to that high in that $3.65, maybe $3.70 range, somewhere in there. $3.35 to $3.65, probably somewhere in there. It becomes another target for taking profits, and then leaving the rest, letting it ride to $589 or wherever we are going. But there is one thing that comes to my mind when I think about where we're going, is what I'm going to do with all of these profits. And if you're sitting on a bag of profits that you've made in the last 2 to 4 years, especially on XRP, you may be wondering what that money can do for you instead of just sitting there and doing nothing. And that's where you need to listen to this right now.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million, and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt. So this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today. And it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.